Hey, if everything goes as planned in about 22 minutes, Andrew will lose his internet, and then we'll improvise here on our end. And it'll be just a normal webinar that we do with Andrew. No problem with that. What we wanted to do with Andrew today is not just talk about how to sell more policies to new customers, but also to do that to the customers that you have. Whether you have a book of business that as big as Andrew's, 45, 46 million, or you're starting off and you're 400,000, 600,000, you're brand new in the insurance industry. What Andrew is going to cover today is going to be very practical, and he's going to take you to school for about 20 minutes and show you some behind the scenes on how he thinks about growing his agency. That said, Andrew, take it away.
Yeah, first off, I mean, to everybody who's doing 50% or more, like kudos, that's incredible. Those are incredible results. And, you are in the minority of the people who are doing that. When I first started really focusing on the third lines, fourth lines, I was around 5% of the time, 5%. And so I'll tell you what I'm at today in the slides a little bit. But always love joining Vlad and Rob. And, to your point, Vlad, about getting bigger and retention, like it's something that I think when you're first growing and you're first getting to scale, you just outrun retention all the time. Just focus on writing as much as you possibly can. But the bigger you get, the harder it is to grow. And sometimes the carriers and the companies that we represent, they don't scale our growth chart. It's linear. And so they expect 10% growth, whether you're a $1 million agent or a $100 million agent. And so I think you set that up nicely, Vlad. So let me just go ahead and share my screen. We'll just kind of give the agenda. I always like to give the agenda. And, I get a little bit cheeky with this idea of going deeper. There's been a lot of correspondence by the company saying, we got to go deeper. We got to go deeper, go deeper. And so here we are. We're going to go deeper, and we're going to go deep on third and fourth lines. Okay. We're going to talk about why. I'm going to give you some math to really drive the point home with real dollars and cents. And I just want to be upfront. The math can be a little bit overwhelming, but don't worry. I'm going to send out a calculator. It's going to make it very easy for you to see these numbers for yourself. I'm going to give some tips on how to sell more third and fourth line households at new business and service, but Vlad's going to go significantly deeper on that. I'm sure Rob is going to add quite a bit to that as well. He's on the front lines. I'm going to talk about how we trained. Rob and Vlad are going to talk about how they train. And then I'm going to talk about something new that we're trying on the service side that we're having a lot of great results on that's driving extra lines of business. And so let me close that poll out and let's dive in. So a little bit about me. I've done a number of these at this point. I'm not going to belabor the point. I have an agency, got to 45 million in 7 years. I'm at year 8. I'm still at 45 million. And I'm kind of starting to joke, right, with retention. I'm like, I'm 45 and 7, 44 and 8, because we have a lot of headwinds on retention. And what I'm finding is that people are canceling one line some of the time, canceling 2 lines a lot more of the time, but canceling 3 lines almost never. And so we're going to use this as a retention tool. We were named as one of the Inc. 5000 recipients, as one of the fastest growing companies in America, which I'm really proud of. Then I also run Next Call Club, which is largely a lead and telemarketing company, but we do a little bit of everything when it comes to spam, outbound, data providing, all of those types of things. But I really just love marketing. I'm passionate about marketing and growth. And so that's a little bit about me. So let's dive into this. Let's talk about the problem. I say insurance agents are bleeding. And I say that because I keep a pretty good finger on the pulse for what the market is doing when it comes to buying and selling agencies. And whether you're looking to buy agencies or one day sell your agency, I think that's most people out there want to have an exit at some point or want to keep growing. We want to take a look and see what the market is doing. And if you go to agencyforsale.com or the Facebook page of agencyforsale.com, they're a great company. They put a lot of data out, but you can just scroll down their page. And what you'll find is that the agencies that are for sale, by and large, you're seeing retention numbers of 77 to 83%. 3 years ago, it wasn't unheard of to see 87 to 91% on the regular. And don't get me wrong, there are still agents who are retaining in the high 80s or low 90s, but they are few and far between. We have gone through an unprecedented rate cycle, whether you're a farmer's agent, a State Farm agent, an Allstate agent, and insurance agents are bleeding. And so when we look at what's going on, shopping is at an all-time high. You hear a lot about this idea of a K-shaped economy. Some people are doing amazing. A lot of people are struggling to pay their bills. And I was just having a conversation with somebody I consult with this morning. They said, we're just not closing everything. I said, what's changed? They said, people are just so much more price focused than they have ever been. And I think we're seeing that with the economy. So shopping is an all-time high. We have a ton of rate volatility. I think in Georgia, like I'm going to probably butcher these numbers. We've taken like 160% of auto rate and about 90% of home rate in the last 3 years. A lot of people are double dipping. I know that's not unique to Georgia. I know that's not unique to Allstate. There's a ton of rate, not to mention, there's declining customer satisfaction. We're focused on sales. We're not super focused on a great experience. And people are asking themselves, why should I stick with the given agent if they're not going to do anything but sell me more products? Third, comp changes are compressing margins. We're seeing this across every single company. They are changing the way we get paid, and they're changing the way we get paid often. And so what we need to do is find a way to increase our revenue so we're not laying people off. We can continue to grow. And then at the end of the day, this is the kind of the big looming threat is that AI and direct to consumer is commoditizing what we do. And so I said this on a podcast I did last week. I said, look, it's AI is not going to kill the insurance agent, but it is going to drastically raise the bar. Just like Charles Schwab and E-Trade didn't kill the financial advisor, it just killed a lot of mediocre financial advisors. So we have to up our game. So what I want to show you is that when we went into 2023, going from 2022 to 2023, and 2023 was the best year we ever had. Allstate had changed our comp plan to say, look, if you write a monoline auto policy, you're going to get paid a 4% renewal on that. And that was just something I could not abide by. So I went back and I looked at what our bundle rate was at new business. And I realized that we were sitting at 46%. 46% of the time we were getting two lines. So more often than not, we were only getting one line of business. Well, we raised the flag on that in November, and we finished 2023 with a new business bundle rate of 92%. Well, I should say that's 92% now, but we were around 90%. Okay, so the change can happen very fast. And that's what I'm trying to illustrate here. It takes focus, but we're going to tell you how. And then here's the 3-line rate change. Okay, I think I said I was at 5% on my total book is what it was. I think new business was around 9%. Today we're at 42%. 42% of the time we are getting 3 lines at new business. So again, we didn't really start focusing on 3rd-line bundles until like 2024. And the goal here was how do we make up the comp that we are losing with these comp changes? So when we think about like the book of business, okay, my book of business today, based on a premium basis, not an item basis, this is the breakdown on the left-hand side. We are, almost 2/3 auto. And that's a problem. And I'll tell you why that's a problem. If you are judged on loss ratio, which I know a lot of us are, auto is going to run a higher loss ratio than home almost every time. They will talk about high loss ratios on home, but it is almost always based on catastrophic losses, which oftentimes aren't held against you as an agent. Auto is also the most volatile from a rate perspective. So if your book is majority auto, you are going to retain lower, have a higher loss ratio, and you're just going to have more volatility in your book year to year. If you are focused more on these other lines that retain higher, have lower loss ratio, you are going to have more stability. Just one thing that I don't think needs to be explicitly said is if you're too heavy in one market, especially, home, and I'm not trying to talk you out of home here, but like I remember back in Florida. So I started my insurance career in Florida. And in 2008, 5 hurricanes came through in a matter of like 3 months. And every major insurer pulled out of the state. There were agents who were 2/3 home and 1/3 auto. Pair that with the financial crisis, you had agents going out of business, which just does not happen in the insurance agency. People sell their agency or they leave, but they don't go out of business. So diversify your book. It's going to help with volatility. It's also going to shield you from natural risk. So here's why going deep matters, okay? I always talk about it from a perspective of your service load. It's like, would you rather have 300 customers with 1 line of business or 100 customers with 3 lines of business? Well, I think most people would take the second option. You have less customers to service, higher premiums per household, and generally just a better client in general. And so what we talk about here is this idea of like rate increases stop being fatal. And what I mean by that is it's very rare that somebody cancels everything. They might get rid of their auto. They might get rid of their home. But are they going to get rid of that life policy? Are they going to get rid of that boat? Are they going to get rid of that landlord policy? Those like those smaller things that they have that, a boat might be $400 to insure. So like, cool, they're going to save 10% on their boat. They're not going to move it. So it keeps you in the game. You might not save everything, but you're going to save the household. When we look at retention, oftentimes we look at policy retention, but household retention is important too, because we have an opportunity to get that person back. Another piece is you just blocking every other agent. And there's two ways this happens. One, if they have their home with you and their auto with somebody else, and that other agent is good, they're probably cross-selling that home every single time. And if they're not, well, you got lucky. But the other thing that happens is if you have a home, an auto, a boat, an umbrella, an RV, they might be saving money on two of those things, but twice the price on the RV, twice the price on the umbrella. It levels the playing field, and it also adds complexity. I'll never forget when I thought about scheduling personal property on home insurance policies. I always ignored it. I was in the kitchen at my sister's house. She's 10 years older than I am. She's like the perfect demographic for Farmers, State Farm, Allstate. It's like the multiple car, married homeowner, good net worth, good income. And they asked me, they said, Andrew, why have you never tried to get our insurance? I said, yeah, well, I don't fall for like insuring family. It's like, it's a mess. And I said, well, who do you even have? And they said, I have Liberty Mutual. And I said, well, how long have you been with them? And they said, probably 15 years. Do you think we're overpaying? And I'm like, well, I don't even know what you pay, but probably. And I said, why have you never shopped it? And my sister looked at me and she's like, well, I have all this jewelry and it's all like scheduled and I'd have to get it all reappraised. And a light bulb went off in my head. And I said, oh, it makes them sticky. Okay, got it. And so this is just like another example of how like more lines, more things can create friction or barriers to exit for people to leave. It goes without saying that it raises your profitability, right? That's the idea of the service load and the premium, and so there's a lot of reasons to do this, but I think we think about it, right? Like we talked about this, are they going to leave are they going to get rid of all three lines? Almost never. Acquiring the customer is the most expensive part of what we do. We get paid the most on it. And so we chase it. We get recognition and awards based on acquiring customers. So we chase it. But like one of the biggest mistakes I made growing my agency is I did not focus on retention until like 2 years ago. And I just think about how much bigger my agency would be, how much more money I would have made if I had just put a little bit more focus out of the gate. Maybe not my whole focus, but a little bit more out of the gate. So let's just talk about this very quickly, okay? And there's a lot going on here. I will share a calculator where you can do this math yourself. I'll have a Loom video to kind of talk through it. We'll make it easy, but I don't want to spend 30 minutes talking about it. The most important thing to think about here, okay, is that we are running a scenario where we look at, you're writing a home and auto policy together. And in this case over here on the left, if you can see my cursor shaking, we're not getting a third line ever. Over here on the right, we're getting a third line 90% of the time. So let's not focus on the extremes. Let's just say you're getting a third line of business 25% of the time. Based on the average premium over here, and these are my commission rates on new business. I know, Farmers is a little bit different, State Farm is a little bit different, but it's also going to change the lifetime value because Allstate might get paid a little bit more on new business, but we get paid a lower renewal. So there's trade-offs and lifetime value is going to come in later. But just by going from 0 to 25% on that third line, you're adding $50,000 of revenue immediately to your business. That could be one or two producers. Maybe one solid producer, two newer producers. 50% bundle, now you're at 100,000. And you can see that it just scales up from there. And we're not even thinking about when you're getting 4 lines or 5 lines. And so what I want to show you is that small changes compounded over the course of a year can have massive outsized results on your revenue. Okay. So this is the profitability by number of lines. This calculator will also have a lifetime value sheet, which I'll touch on here in a second. So let's talk about what lifetime value is. If you've heard me talk about numbers, you've heard me talk about lifetime value, but I'm going to refresh you. Okay. It is the total revenue you can expect from one household for as long as they stay with the agency. Not what they paid for the year, not what they pay on their premium, the total amount you are ever going to get. If you add products, they spend more money, so that lifetime value goes up. If that also increases the retention, they stay longer, that lifetime value goes up. Everything that we do in business, whether you're an insurance agent or you're selling oranges on the side of the road. It is all about what does it cost you to acquire a customer and how much money do you make from that customer. And as long as that gap is wide enough, you make enough money to not only survive, but thrive and grow. So to explain it, like you're five. Basically, we're saying, okay, a kid buys a lemonade for $2 and then he comes back every single week, but he's going to spend $20 over the life of his whole lemonade buying journey. And what we know is that if we can spend $5 to get him to buy lemonade and he's going to spend $20 over his lifetime, we make $15. And so it's no different. If you have a customer that has a $2,000 lifetime value, you can spend $300 safely to get them. If they have a $10,000 lifetime value, maybe you can spend thousands to get them. I was talking to a farmer's agent just yesterday. They were talking to me about how Farmers has recently started paying with the monthly bonus around 30% on workman's comp, or maybe that's coming, but it's going to be very, very juicy. And so I did the math on it and I said, you could probably spend $1,500 to acquire a workman's comp policy because you're going to make so much more on the lifetime value. So it's not only about cost per sale. It's not only about return on investment. It's also about the long tail of lifetime value. Okay. So here's how we actually look at lifetime value. This is a spreadsheet, a lot of numbers, but we're basically just looking at cash flows. We're saying, okay, cash flow zero, which is CF0, is the initial comp that we get. And then all of these are just renewal payments. So what we know is if we know what retention is, we can figure out how long they're going to stick around with us. Just a very quick, easy example. If retention is 80%, customer life is 5 years. We can do this easy math by saying, okay, well, 80% stay, 20% leave. 100 divided by 20 is 5. That means in 5 years, you churn your entire book. So if you have 80% retention, in 5 years, you churn your entire book. And if you have 90% retention, 10 years to churn your entire book. It is a massive change. And so what we're looking at here are the cash flows. But ultimately, I wanted to look at an example. If you only sold home insurance, your lifetime value on that customer is $2,200, assuming all of these premiums and commissions, okay? $2,200. Well, if you're getting the home and the auto together, well, now that lifetime value is $3,100. Your lifetime value just went up about 38% by adding the second line. And when you add that third line, it goes up another 30% or so to a 65% lift. So the difference between one line and three lines is a 65% increase in lifetime value. If that doesn't convince you to push harder on this stuff, I don't know what will. If you could raise the revenue that you're going to receive in your agency over the next 5 to 10 years by 65% by just making a small daily change, I mean, you would be a fool not to do that. No offense. No offense. So how do we do this? How do we go deeper, right? 3 steps. 1, focus on quoting 3 to 4 lines per household. The more lines you quote, the more lines you're going to sell. You're not going to sell a boat if you never quote boats unless they specifically ask you. And at that point, we're not a salesperson or an order taker. 2nd, think outside the box on products, okay? So think about everything that you sell. You might turn your nose up at, this or that, but I think about things like flood. We sell a lot of flood insurance. Flood insurance pays really well. It retains really well. We sell these auto warranties. We have this auto warranty product. We get paid $100 on them. They're not great, but you know what? They're an easy sale and customers love them. And we've probably made over $100,000 from those in the last 2.5, 3 years. Jewelry, e-bikes. There are so many things that you can sell. Think about every product you have access to. Look at what you get paid on it. How long does it take to sell it or quote it or bind it, right? Like if you're doing life insurance, we know that there might be a lot of blood work and underwriting, but maybe there's a simplified policy that's a good fit. And then accountability and awareness is really, really important, which I know like Vlad and Rob are going to talk about that quite a bit. So people ask me, they say, okay, are you doing this on the sales side or are you doing this on the service side? Whose responsibility is it? And I say it's both. It's both of their responsibility. Sales should try to get 3 to 4 lines, and then service should play cleanup because sometimes you find something, you can't get it closed. They don't want to bother with it. Great. But what service needs to come pick that up when they're having a general discussion. And if they're not having a good enough discussion to uncover these things, we got to have better discussions because again, we're getting commoditized by direct to consumer, call centers, and AI. So we've got to be an advisor. We've got to be different. Don't call yourself an advisor if you're not allowed to call yourself an advisor. Just kind of throw that out there. Okay. So I just want to break this down. I'm not going to read through every single thing, but different groups focus on different things. I do not want my sales team writing an e-bike. It's too in the weeds. It takes too long. But if my service team is doing a review and they find out that somebody has an e-bike, yeah, I want them to take a swing on it. Supplemental health is another really good example of this. Like we have these hospital indemnity policies and we have these gap policies. They cost about 15, $20 a month. Agency gets paid 45% commission on that. Yeah, I want my service team to write that. I don't really want my service team writing life insurance, but I do want my sales team doing that. And so think about you don't have to do every product for every group or every person. Think about speed, efficiency. Where do things fit in the conversation? Like we would not sell a warranty on new business because the price is high. The value is good, but it just kind of muddies the water. So just kind of a general action plan, right? Research everything you can write, how you get paid, pick who's responsible for what, educate your staff on it, and then hold them accountable. So this is a really good spot. Like I'll just tell you what I do, and then I'm going to kick it over to Vlad and Rob, and I'll stop sharing so you can share. So like we're going to bounce screens a little bit, so bear with us. But this is what we did, and don't get me wrong, like Vlad and Rob are really the training experts here. But like what we decided to do is we said, look, we're going to pick one focus per week. When we first started, it was picking one product per week. So we're like, okay, well, we need to create a lot of awareness around it. Does the team even know that we offer it? Do they know how to quote it? Do they know how to talk about it? Do they know how to pitch it or role play it or close it? And so we did 2 sessions a week, Tuesdays and Thursdays in the morning from 8:30 to 9. The first session of the week was just, hey, by the way, this is what it is. We're teaching you that we have this thing. And then Thursday was more of an applied practice. And we just did this every week and continue to do this every single week. I think we've actually moved up to like every single day other than maybe Friday at this point, because if you don't keep it in front of them, it just kind of evaporates. There's just too much going on. But Vlad, Rob, what do you guys have to say about this? Because I know you have a lot to add.
Yeah. Okay. So I'll first share something that Rob and I talked about yesterday. We were discussing this webinar, and I went over some of the things that we're going to be discussing. And I turned to Rob and I said, Rob, we've had a lot of conversations about multi-lining and cross-selling additional lines of business, motorcycle, RV, trailer, boats. But there seems to be a block where producers, service team members know they should do it. They understand that it helps the agency grow, but for whatever reason, they choose not to bring it up. And Rob, you shared something with me yesterday. If you can share that with the group here about hoping that they would say no. Can you share that with the group?
Yeah. So to go a little bit deeper, there was a time in our agency when we first started focusing on selling a lot more life insurance. That was the goal. Like, hey, we're doing good on home and auto. Now let's bring in life insurance. And this went into other products, but it started with life. And we had a few trainings with the team. Like, hey, let's start bringing up life. Here's how we should bring it up. Here's how we get into the conversation. And weeks would go by and we'd reconnect with people and they'd say, yeah, we're trying, but we're not pushing things through. And eventually we start asking deeper questions and we're like, why isn't this happening? And someone on our team, he raised his hand and he's like, to be honest, I've never actually went through a life application. So like, if they do say yes, I don't really know the next steps. And that was kind of like this light bulb moment where we're like, oh, okay, it's not that people don't want to sell it or they don't want to bring it up. It's just maybe they're not proficient with the quoting system. So that's when we took a deep dive. The thing that I told Vlad was that I said, I don't know if a lot of people on our team would admit this, but I know that this is the case. When we're bringing up a lot of these specialty products, life, trailers, boats, RVs, I think a lot of sales producers, and you guys on the other end of the screen, your team is probably feeling this way. When they bring up these third and fourth lines of business, they're probably hoping that the prospect says no. Hey, do you want life insurance? I see that you have an RV. Can we quote that? In their mind, they're saying, please say no, please say no, please say no. Because if they say yes, then what do I do? And a lot of times that's where the disconnect is they don't know how to quote it, what that conversation sounds like, and how to bring it to a close.
Yeah. So to add to that, if I ask Rob, what other items do you have insured with your current carrier that we can bring over here? And he says, well, I have this trailer. I don't really know what I need insurance for when it comes to the trailer. I just know I have it. Maybe you should quote it. I don't really know. I think I might just cancel it. So it's this passive request or response that they give you. Now, as a sales agent, if I haven't logged into the system to quote a trailer, and I know different carriers have different methods in quoting, so in some cases it can be really quick, but in a lot of cases you need to get some additional information, VIN number, make, model, and the producer will feel like, well, I don't know what questions to ask, and I don't know what a trailer policy actually covers. So I'll just take the path of least resistance and I'll say, well, let's take a look at your home and auto first. And if you like the rate, then we can revisit the trailer at that time. And this happens all the time. It used to happen in our agency. It might be happening in yours as well. So a couple of practical things on how to get producers on the sales side and service side comfortable with quoting motorcycles, trailers, RVs, motorhomes is pick a couple of days a week. And this is something that will go for a few weeks, and run at least 5 practice quotes. Take a household and prepare a quote for a motorhome, a trailer, a motorcycle for that particular household, and then start from scratch. You can find different VIN numbers from online. Just find a motorhome that's selling, a trailer that's selling, and use that information and quote that. Get the reps in so that the producer and the service team member can go through the questions like it's second nature. They're good at quoting the home and the auto, the renters. A lot of times they just don't know what questions to ask for the other stuff. So that is step one. If you haven't done that, if your producers can't teach how to prepare a quote, then they don't know how to do it themselves. So that's step one. Step two is they have to be given some sort of script that they can use to pivot into those other lines of business. So they're talking about home, they're talking about auto. When do they ask about all the other lines of business, the trailer, RV? And what we came up with was this very simple one-pager. This is something that we'll share with everybody who was on this call, but this is something that you would print and put on every workstation for everyone that works in your agency. Sales, service, everybody who talks to customers. And what we have here is a couple of questions, and then depending on the response, we will go to whatever product it is that they said they have. And for each one of these products, we have the name of the product, the description, and then a couple of talking points for the item. So for example, it would sound something like this. I prepared a home quote. I prepared an auto quote for you, Rob. And before revealing the price for your home and auto, I would say something like, Rob, as I finalize the rate here for you, I do want to ask, do you have any recreational vehicles like an RV, trailer, boat, or motorcycle that I can add to this quote?
Yeah, actually, I have a motorcycle.
You have a motorcycle. Okay. And if I have that information, sometimes it pulls prior reports and I can see the type of motorcycle they have. I can just mention it. If I don't, I can ask, what kind of motorcycle do you have? And then I go right over here where it says motorcycle. And as he's answering, I'm reading here, motorcycle insurance can help cover damage to your bike, theft, and liability if you cause an accident. You crash and damage your motorcycle, collision helps with the repairs. Someone steals your motorcycle, comprehensive coverage helps with the loss. This is very beginner stuff, very basic information, but it's helpful to just have it in one place. Okay, so that's an easy way to get into that. Maybe he says something like, well, I have a travel trailer. And I'm thinking to myself, what's the difference between a travel trailer and an RV? I think they're both similar. What is the real difference? And I can just go here and see, okay, trailer is something you pull behind your truck or SUV. It has no engine. Your auto insurance does not cover it when it's parked or unhitched. And then it has a few talking points on if your trailer is damaged in an accident, policy helps pay to repair or replace it, depending on the coverage you have. RV, on the other hand, is a large vehicle you drive yourself like a house on wheels. It has its own engine and needs its own separate insurance, kind of like a car. So it's supposed to be written in very basic layman's terms. And the goal here is for us to have a quick cheat sheet with these talking points. So let's say Rob, going back to this first question, says, no, I don't have any of those items. I don't have a boat, trailer, RV. Then my follow-up question is about additional properties. Now, Rob, do you have a secondary property like a vacation home or a rental property that we need to add to this quote? And just so you know, the more policies you have, the bigger the discount you would get on your home and auto insurance. Do you have a vacation home or a rental property?
No vacation home, not yet, at least, maybe in the next couple of years. But I do have a rental property. Do have one of those. I didn't know if I should bring it up now or that's something I should find on my own, but yeah, I do have one.
So, Andrew, when you and I talked about this a few weeks
Yeah.
ago, when we discussed having this webinar, I showed you this. And at that time, we only had one question in here, and everything was lumped into one ask. Do you have a trailer, RV, motorcycle, or any additional properties that you own that we need to quote? And that's fine for somebody who wants to just keep one question simple and easy, but you really liked separating the question. Can you give me the logic as to why that is?
Yeah, absolutely. And when you kick it back to me, I'll show some math again, of course, behind this. But you know, what we have found is that if we can only insure three things for a customer, of course, we don't want to stop at three, right? We want to get everything every single time. But what I'm always trying to think about is, we talk about speed, I talk about efficiency. So if I say, okay, I've got all these products that we can sell, and I want to be direct in my ask, right? I want to be like very upfront, direct in my ask, and I can only ask for one thing. Because sometimes when you're training your team, if you ask them to ask for everything or you ask them to ask for a bunch of things, they get paralyzed. And so we say, like, let's keep it simple and say, if you're going to ask for one thing on every call, our corporate reps always say, ask for life insurance on every call. And I said, nay, we're not doing that. Not today. We're going to ask, do you own a rental property every single time? Because for us, at least, in Georgia at Allstate, a landlord policy is the single most efficient thing that we can quote. It has the highest close rate to premium ratio. And so whenever we quote a landlord, we can reasonably expect that we're going to write $300 to $400 worth of premium. And so I like to be a little bit more explicit in the ask. And I think the other side of that, Vlad, that we talked about is, there's a lot of ways you can ask this. And we've come up with multiple talk paths over the years, but I'll say, do you have any, in order to properly insure you and your household, we need to understand every motorized vehicle that you have in the household, whether you want to insure it or not. Now, if it's a trailer, it's not motorized, right? But we should be asking explicitly. And then I say, great, what about property? Do you have any secondary properties or rental properties? And so we want to be a little bit more explicit, at least in our agency, because I have found that if we are vague, we get nothing. So when we're direct, we get it. But landlord is really that is the crown jewel for us. Like if I can get a third line and I can pick anything, it's going to be a landlord.
Okay. Um, Landlords, I think for the state of Georgia, being an Allstate agent, awesome first thing to go to. In our agency, we love landlords as well. In the state that we write business in, we write Texas, we're at Colorado, now started California. You might be in a state where you can't write landlords just because of carrier underwritings, but you can find underwriting restrictions, but you can find that one line that you can always go to and start asking about that one item. For me, what I've learned in doing this over the last couple of years is that just because we ask our team to ask about additional lines of business does not mean that they're going to turn around and do it. We have to dumb it down, not because our team is not dumb or because they're dumb, but because we need to make their job easier. So having a guide like this with very simple questions, and you guys can change this and have this be whatever questions you want it to be, something like this should live on their desk. If you'd like a copy of this, let us know in the chat and we'll send it out to you guys afterwards, to everybody who was on this call live. Okay. The other thing that is really important is bringing up these other lines of business during the onboarding. Okay. I see a lot of yeses. We'll send it out to everybody after this call. So in our agency, when we close a client, Rob, without fail, there's an onboarding meeting that we require that all of our clients show up to. In less than 30 seconds, what is the onboarding call and why do we do that in our agency?
Yeah, so the onboarding call from the client's perspective is a follow-up call. And with farmers, and I know with a lot of companies, once you close the deal, it's not the end of it. There's documents that need to be signed and things that need to happen. So the onboarding call is to ensure that those documents get signed so that no discounts fall off, or worse, the policy cancels. So the client understands that this is a really important call. I have to show up to it. From our end, that is a big priority because we don't want it to cancel or lose any discounts and create more headaches. But we also get another touch with the client. We can also have them download the app, and we get referrals and Google reviews and all sorts of things. But we can also ask a little bit deeper questions and get into a lot of these specialty products.
Yeah. So in summary, when a sales agent closes a sale, I know in a lot of agencies, the sales agent just sends the documentation, the client signs the required documents, and they're done. With our carrier, some of the documents are not available right away. We have to wait until the next day for the documents to be available to sign. And then from the time that you get those documents, you have 5 days to sign them. And if you don't, the policy cancels. So a client misses one document and their policy cancels. Not a good place to be in. So what we do in our agency, whether the client has signed all the documents or not, we always tell them to meet with us the next day. If I'm binding the policy today, we're meeting tomorrow or at the latest the day after. So 1 to 2 days at the latest. It has to be all fresh in their mind. And I'm not going to be the one who meets with them as a sales agent. I'll schedule a meeting for someone on our service team. The service team hops on a call just like this, and preferably it's on camera, on video, and they share their screen and they go over the policies that the prospect purchased. They make sure that the coverages all make sense. They get the documents signed, and then the goal there is to make sure that from here on out, anytime the client wants to call in for service-related tasks, they don't call the sales agent, they call the service team. That's how they make that introduction. But what we have learned is that those onboarding appointments quickly became administrative appointments where we were just there to sign documents, go over coverages once more, and get them to download the app, and we were done. So we created this onboarding appointment checklist of things that we got to do before the call and then things that we do during the call. And what you'll notice here is that when we first start the call, we thank them enthusiastically. Thank them. Andrew, thank you so much for joining our agency. We're thrilled to have you. Sounds like you talked to so-and-so from our agency. How is your experience with him? Oh yeah, everybody loves working with him. Well, really the purpose of this call, you go over the purpose. You satisfy all the contingencies. If there's any documentation that we need from the clients, we do that right there. Get them to sign the documents, cover home inspection if that's required. And this is where we start cross-selling other lines of business. We simply ask, now I'm looking at my notes here from the conversation that you had with Bob, and I just wanted to know, do you have any RVs, trailers, boats, or motorcycles that we did not insure, but we should be insuring? No? Okay. What about a landlord or vacation home? So if the sales agent didn't get that, here's an opportunity for the onboarding specialist to get it the second time. And then once we ask that question, same thing happened on the service side. They'll freeze if they don't know how to quote it, or they'll get some information and send it out back to sales agents. And what we're training our service team to do is just sell it right then and there. Gather the information, prepare the quote, sell it right then and there. There's no need for a second follow-up call. Everything can be quoted and sold in that first onboarding call. And if the service team is not comfortable with doing that because they just don't have enough practice reps, then that's something they should do for a few weeks in a row. Just practice these quotes with cross-selling additional lines of business. And then, of course, at this point, we would ask for a Google review. We have at this point about 1,800 reviews on Google, thanks to having these onboarding appointments. And finally, at the very end, we ask for referral once more. So this second touch points, the second sales appointments that we call our onboarding meeting is another way for us to cross-sell additional lines of business. Now, final thing I'll mention as far as another touch points, we ran a campaign in our agency. This was earlier this year where we just pulled a list of every single client that just had a home policy. So Andrew, you talked about you guys are really heavy in auto. Most of your book of business is auto. For us, it was the opposite. Most of it was home. We didn't have a lot of people who also had the auto. And we just split that entire leads list evenly with the sales team. And we said, we have 1 month to call every single one of our customers who has a home policy, not an auto policy. We gave them a very basic script. We practiced it a few times in the morning. And then every single morning they were to call 5 to 10 of those leads. And we had immense success. And the fear that I had was I don't want to poke the bear. I don't want to call the clients and say, hey, we have your home insurance, but not auto insurance, and then have them tell us that they want to cancel the home. They were already actively shopping elsewhere. So that fear was purely made up in our mind. And we ended up selling a lot of auto policies just by calling our existing customers. And even though we did that for a short period of time, we saw a massive lift in our total amount of bundled households, just that 1 month of reaching out to our clients. And it's something that we're going to do again in our agency. Okay. Andrew, I know you had a couple more slides. Why don't you cover that? I wanted to also share something at the end around accountability. So it's all good to have these expectations, but how do you hold your team accountable? That's a different story. We'll come back to that.
Yeah. So, to your point about onboarding, like when I was a salesperson back at State Farm all back in the day, like I would have killed for an onboarder because I would just not do my paperwork. The automatic payment wouldn't go through. You had to do that. And then it would cancel and I'd pay chargebacks. So, I think onboarding is a no-brainer choice. And so to go back to this point that we talked about where it's like, hey, like what's that kind of like one thing? Like we're going to start with like, what's that one product line that we're going to focus on to get this third and fourth line focus rolling in our agency? It was landlord. And what you can see here is like, I just looked at my Tennessee agency, which is a relatively small part of my overall book. And you can see that for like the last 3 years, like we have not written a lot in this agency. But if you look over here on this right-hand side where it says expected annual premium per quote, all we're doing to calculate this is we are taking the written premium divided by the number of quotes. And what we're saying here is for every quote I do on a landlord policy, I expect to write $383 in premium. And it's basically in line with auto, which is crazy because we know we can get 3, 4, 5 autos at one time, whereas a landlord is typically one. It's its own policy. Yes, we can have more, but it's one policy. So, you can run this math yourself. Again, you take the written premium divided by the number of quotes, and you do that for every single line, and it's going to give you your efficiency rate. Again, this will be on the deck that we send out. So I want to talk about like vague questions and vague answers. We don't have to go too deep on this, but this is kind of going back to like, what Vlad was talking about with the talk paths is that, I think a lot of agents say, what else is on your keychain? I think it's like it's a good question to open the door, but it's very passive and it makes the customer do the work of being like, what else do I have? Or, hey, like maybe I don't even want to insure it or talk about it. Whereas I like to default to, do you own a motorcycle? Do you own a rental property? Yeah, I also talked about like, hey, what motorized vehicles are in the household? That's a little bit less direct than do you own a motorcycle? But the point is that vague questions get vague answers. So just keep that in mind. Be bold, be direct. And so to this point, we talked about new business, we talked about onboarding, and then we're talking about service. And obviously, we want to make sure that when people are calling into us, we're having good conversations, we're offering a review, we're going deep so we can actually make recommendations and find things. But I have not had as good of an onboarding process as Rob and Vlad have had. And so what I've decided to do is I said, okay, I'm Next Call Club. I love outbound calling. I have a telemarketing company, right? Like we have over 50 SDRs. I have, 3 SDRs for my own agency. And basically what I'd say is like, okay, like what if I just applied this to my book of business? And so we said, look, we're going to take one SDR and we did it for 1 hour a day for the last month, just as a test. And we're going to call our best customers 5+ years and high premium. 32% of the people that we talked to, we found an item that we can insure that we do not currently insure, and then scheduled a review to go over their policies with an agent. So 32% of the time, we are finding something that we don't insure. So what do you think I did? I took that data and immediately went back to the sales team and said, guys, you are leaving 33% of our customers. You're leaving meat on the bone. So how do we actually do this? Well, we ask 6 questions. We call, we say, hey, I'm so-and-so, I'm from Peachy Insurance, your renewal's coming up, and we just wanted to, 1, update your file, and 2nd, see if you were interested in reviewing to see if you can find any discounts and that your coverage is not, too high or too low for you. People generally say, yes, I'm interested in that. I say, cool, let me ask you, 6 questions, and then we can talk about the review itself. I'll get you over to a licensed agent. And this person is not licensed, which actually in a lot of ways has helped us, because when they start asking questions about their policy, we say, hey, like, I'm not a licensed agent. And honestly, we really respect your privacy. at Peachy Insurance. And so I don't have access to that because I'm not a licensed agent. But let me get you scheduled or over to a licensed agent who can do all of this, because I don't want the SDR having an in-depth discussion. I want them getting the information and qualifying. So here are the 6 questions. First, has your marital status changed? Pretty wide open. Second, have you changed jobs or retired? Then regardless of what they say, oh, great, what do you do? Or what did you do? Right? Great rapport building opportunity. Third, do you own a business? Fourth, has a child entered or exited the household? Number 5, have any adults entered or exited the household? And what I liked about these questions that we came up with, and not to toot my own horn, of course, I like my own questions, but first off, all of these are life needs questions. So if you're trying to sell more life insurance, these are all triggers for life insurance need. Second, they all have relevance to the actual policy. We need to know, do we have the right drivers on the policy? Is the household rated properly? Do you own a business? Should one of these be commercial use? Is it a home-based business? All of these things create opportunities to find more things. People answer these questions without a hitch. We're not getting any pushback on it. And then finally, we say, in order to properly insure you and notate the file, we need to know everything that you own, whether you insure it or not. Do you have any of the following? And then we literally just go down the list and then we log it. And 32% of the time, they have something that we don't insure. A lot of trailers, a lot of boats, finding the rental properties as well. So, just real quick, because I saw it, Angela asked if we're doing this on every renewal. We are doing it on every renewal for our 5+ year customers right now, because again, it was just kind of like a test, but I'm actively in the process of hiring a full-time SDR to do this for the team. And we will do this for everybody. And I will get 2 to 3 of them if I need to hit every single person. And so, we are calling them out of the blue and saying, hey, your renewal's coming up. We want to review it. We need to update your file. And people are going with it because we are their insurance agent. So, and one thing that just goes beyond saying is that we also thank them vehemently for the business. Hey, thank you so much for being a client. We know that things, you have a lot of options out there and we don't take it lightly. So, just say it the same way every time, right? Like, in order to fully up to date, everything that's in your household, do you have any of the follow, and then like, here's the list that we typically ask. And I think we're leaving a few things off, but I won't belabor the point here. So, and this is where I'm gonna kick it back to Vlad and Rob here in just a second. But visibility is really, really important. We need the team to see that other people are quoting third lines and selling third lines. So we use Slack. We put these things in Slack, and then there's got to be accountability for the managers too. Like, we look at the metrics, and if they're not hitting those, it's a conversation with them and our sales leader to why they are not seeing their team drive this business. So, I'm going to just finish this last slide here, and then I'll kick it to Rob and Vlad, and that way we're not going back and forth. But I just want to kind of show you my service team over the last, year or so. I haven't run this since April, but, my retention got into the high 70s, right? And now we're clawing back up to 80 in the low 80s. And part of it was I really wanted to beef up my service team. And the problem with having a lot of service is that it has a lot of cost. And so I said, in order for me to justify going from 8 service people to 15 service people, the service team needs to drive more business. And so that's what we did. We started focusing on going deeper into the household. And what you can see here is this is my payroll number. You'll see like a crazy January there. It's a 3 pay period month, just FYI. That's why it's so high. But what you can see here is this is my net cost in the yellow and the orange. So as my payroll has gone up, my net cost has gone up a little bit, but not nearly to the same rate. And that's because the service team is driving production. So there are a lot of ways to win. You should be going deeper at new business, onboarding, service. If you're doing that across the board, you're going to have a bigger, better retaining book with less customers and more premium, better quality customers driving better quality referrals. It is the single best thing that you can do for profitability is going deeper into the household. So here are the 5 steps I recommend again, and I will kick it back to Vlad and Rob to drive it home.
Can you go back one slide, please?
Yeah, sure.
Service payroll. This is a question that I wanted to ask you here. So let's take a look at, say, the last month that you have here, April. Yep. Just to be really clear here, total payroll, 56,000 is your service team.
Yep.
The total net cost was 32,000. Can you explain once again what net cost represents?
So my service team used to only be a service team. Like they had some cross-sell goals, sometimes they'd make some money on getting a Google review. And, what I found was that just being a service team wasn't really serving me because my retention was dropping in the middle of a brutal rate environment. And, my service manager was always asking for more staff. And every time I added more staff, retention didn't get better, abandoned calls didn't get better. And I said, okay, I got to do something about this. And so I need to start thinking about my service team, not as a cost to be contained, but as something that could potentially drive profitability in my agency. And so I set a goal for my service team to pay and cover for 50% of their seat. So just to use easy numbers, if they have a $2,000 salary, they need to generate $1,000 of revenue, whether by writing that policy themselves or generating it over to the sales team and attributing that back. And so what you can see here is that in May of 2025, all the way to the left, my payroll was $37,900, but my net cost was $19,000. Basically, what that means is that they generated $18,000 of revenue. Okay. So if we come over here to the right, $56,000 in payroll, $32,000 in cost, they generated $24,000 of revenue. And so my goal, and I hit this last month, is $20,000 of net cost. No matter how many people I have, I want $20,000 of net cost for my service team. And when you change the dynamics like this, I just got to say, like, I've turned over almost my entire service team since May of 2025. Like, there's a couple people who adapted, but you get a lot of people say, well, I don't want to sell anything. Well, we are no longer a fit. We're not going to be like a pure service agency. Like when you call in, we're going to do 4 things every time. We're going to thank them for their business. We're going to make sure their information is accurate. We're going to offer them a review. 5 things. We're going to ask for a Google review, and we're going to ask for a referral. And we do quality assurance on that. And the reality is that they're doing their job properly. It's not about selling. You're finding gaps and you're making recommendations, and they will take those recommendations. So that's kind of the process there.
Okay, so if you have a service team member who you pay $4,000 per month all in, $4,000 per month all in, you want to make sure that half of it gets recouped by them bringing in new business.
Yep.
And so in this case, we want them to bring in $2,000 a month in additional revenue.
Correct.
How do you bring an extra $2,000 a month in revenue? Well, you got to sell $20,000 in premium, assuming a 10% commission. But if you have a bonus that can double your commission rates, then you really need to sell $10,000 in additional premium. So one service team member who sells $10,000 in premium per month will cover about half of their investment that we make into them.
Absolutely.
And this is something that Makai from our team, who's moderating this chat here, and I talked about yesterday. She said, Vlad, you talked to the sales team about how much it costs to have them be here on the team. So if they don't sell 40,000 in premium, we lose money on them. We need them to sell 50, 60. But that same conversation, do you think that should happen with the service team? And I thought, that's exactly what we need to do, is bring the service team into this conversation and say, look, on the sales side, it's very easy for us to justify increases because it's all based on commission. You sell a certain amount, you get a percentage of the commission. But on the service side, we can't just add more people. That's additional cost. Got to be able to either pay for your seat by cross-selling more new business or save cancellations that would have happened. So I think that was a very valuable point. Okay. Let me just share one final thing here on my end. All of this is good, and we can talk about this all day as far as best practices around cross-selling and multi-lining. But if you don't have an easy way to track that in your agency, then numbers will not improve long-term. You might have a lift this one month when there's a lot of attention on multi-lining, but when that attention changes to something else, then multi-lining will fall behind. Multi-lining is one of those things that should gradually get better, a few percentage points better every single month. It should not be this roller coaster of it going up or down. So I'll share with you guys on our end what we do with our agency. And I'll show you the 3 stats that we measure with every single producer that works in our agency. And those who are ISL members, you guys have heard us discuss these so many times. There are three core stats that every sales producer must know as far as how much or where they're at for that month. And the three stats are how many new conversations you had that month. Conversations we define by being on the phone for 10 minutes or longer. So instead of tracking quotes, we track how many new people did you talk to over 10 minutes. And the goal is to have 80 quality conversations per month. And of those conversations, we should close 25% of them. Very simple. Have 80 conversations, close 25%. And when you close the 25% of the 80 households or 80 convos, you should be bundling every other time, at the very least every other time. So you should have a bundle rates of 1.5 policies per household. If you're a Allstate agent, you guys track items, so that number should be much higher. It's probably closer to 2.5 items per household. So if you decide that, okay, these are the three metrics that we want to track, how do you end up tracking that? Well, in our agency, we have this daily stat tracker, which many of you guys have access to through ISL. If you go into the ISL account, click on daily stat tracker. And if you're a farmer's agent, this is the beginning of a new month. Today is the beginning of a new month. You can have your team members start logging their stats today. And I'll show you, this is a real account for our team. At the end of the day, a producer would just go over here, click log stats. The name will pre-fill, the date will pre-fill. They'll put in whatever premium they sold that month or that day, sorry. How many policies they sold, life apps, 2 policies is 1 household, new conversations, they had 4. And you can just pull that by going to your call history report and ranking the calls from longest to shortest and seeing how many 10-minute conversations you had, how many referrals you quoted and how many referrals you closed, how many dials you had, and then your talk time. You could pull that from your phone system. And whether or not you completed your follow-ups. Once you answer these questions, you just click submit activity, and then your entry is set for that day. And what will happen is over time, you'll be able to see how your month is going. And here's an example of what it looked like for our agency 2 months ago when we opened up our brand new California agency. This is a brand new group of people who have never sold insurance in the past. You can see their names over here. We don't just look at how much premium they sold. We look at what stats led to that premium. And in this particular case, top producer he had 67 new conversations. He closed 29% of them. And his policies per household was 2. So he was solid on policies per household, solid on his close rate. The target was 80 new conversations, but he did well overall for that month. When you look at the second producer, 84 new conversations is what he had. So he hit the target for new conversations. He talked to enough new people, but his close rate was less than what we expected it to be. Target is 25. He was at 15. So we know that with this producer, we have to focus on his close rates as opposed to new conversations. He's not struggling with new conversations. He had plenty of those. He's just struggling with close rates. Whereas with this producer, his close rate was solid, but new conversations was lower. And when you collect this data, you know how to give your producers feedback. And in this case, this is not a perfect example for the topic that we're discussing here on multi-lining new households, because all 3 of them did a really good job of bundling every time. But if I would have noticed that this producer at the bottom here was not bundling, his bundle rate was less than 1.5, then we have real data to go off of versus just saying, hey, do you think you're bundling enough? Do you think you need to improve your bundling? I don't feel like you're bundling enough times. We can use real data to make those judgment calls and coach purely based on how they're actually doing. So if you're a ISL member, this is something that you can start logging today. And if you're not an ISL member, you can use a Google Sheets, or you can become an ISL member and start using our daily stat tracker, which is what we use in our primary agency religiously. This is how we make all of our coaching decisions, is purely by looking at the data. And policies per household is a big contributor there. Final point here, our team lead, who oversees the sales team, gets paid a commission based on not just total premium written by the agency, but by the average policies per household. So if the team doesn't bundle, then the team lead gets a deduction in their commission. If the team is not hitting their close rate, they get a deduction in their commission. If the team is not having enough new conversations, then they get a deduction in their commission. So the team lead or the sales manager, they need to be incentivized to not just increase the overall premium for the agency, but also to performance manage the metrics that ultimately drive the overall premium. Andrew, when you look at that, what are your thoughts, and how does this relate to an agency that's maybe been around for a few years? They're 4 or 5 sales producers on the team, but they're not logging stats. What would you tell those agents when they're hearing all these stats and trackers? And follow-up question on that, how do you guys track your stats in your agency?
So we do something very similar. Like we have, basically like an app that was built, and we paid for a third-party app for a very long time, and eventually was able to build something similar. But like what I always tell people is that first off, salespeople hate putting data in. It doesn't matter what industry, what they're selling, whether it's B2B or B2C, they hate putting notes in, they putting data in. And so the first things that you have to do is you have to understand that we need to make it easy for them to do that. And so like I saw like on your taskbar, Vlad, that you had whisper flow. Like we love whisper flow. There's no excuse not to put notes in when you have something like whisper flow. It's like talk to text, it's cheap, it is a game changer. Second, we have to show them like what's in it for them, because if they don't have any value from getting the data, we only have value to hold them accountable. There's going to be natural resistance. And so one of the things I always say is like, whenever you make a marketing change based on data, you should share that you made that change based on the data they've put in. But ultimately what it comes down to is that like, how do we know where we're going if we don't have a map? If we don't have a map, we can't know where we're going. And people are literally spending thousands of dollars a month just for services, for basic analytics, that if they just took a little bit of time, put a little bit of accountability in place to put data in, they can make better decisions. And typically when you go from no data to some data, you start saving tens of thousands of dollars, if not hundreds of thousands of dollars, in the form of like, cutting things that are not serving you or getting more out of what you're paying for. And so I cannot underestimate or understate the value of the data. And I think to your point, Vlad, it's like different people are going to have different things they need to work on. And it's just going to guide that conversation and make it less general, more specialized, and more impactful.
Yep. So let's give a action list, 3 items. So if I'm attending this webinar, what are the 3 things I ought to do coming out of here? I'd love to get everybody to post their 1 action item in the webinar chat. What are you going to do as a result of this? But here would be my top 3. Andrew, tell me if you agree. Number 1, if you have not yet done some sort of quoting boot camp with your team, doesn't have to be fancy. You don't have to over prepare. Do a quoting boot camp for the next few weeks. Tuesday, Thursday for the next few weeks. Next week on Tuesday, you're just focusing on boats and trailers. Everybody prepares 5 boat quotes. Everybody prepares 5 trailer quotes. On Thursday, everybody prepares 5 umbrellas, 5 landlords. And you do that until the team is really proficient. So on Tuesday and Thursday, you could be going over the quoting part. And then on Monday, Wednesday, Friday, you could be going over scripting. So if you have a sales producer or a service team member, you want them all to practice the same scripts. How do you get into that conversation of adding additional lines? So the second part is going to be giving them actual scripts, which we're going to send you guys over after this call. And the third one, you got to track this, whichever way you want to do it, whether it's the ISL daily stat tracker or any other mechanism. Your team, especially sales producers, yes, they might hate logging the data, but that's what gives them clarity on how they're doing. If they're halfway through the month and they're asking you, Andrew, I don't know what I'm doing different this month. I'm doing the same thing I've been doing the last few months, but my premium is way behind. If you don't have any data to help them diagnose the problem, then you're not going to be an effective coach. But if you take them to a stat tracker and say, okay, you're on par with new conversations, your close rate is pretty similar to the last few months, but your bundle rate went from 2.5 to 1.25. You've cut that in half. You're not bundling this month. That seems to be the issue. What do you think is stopping you from doing that? And you go back to some call recordings, see how they pivot. So having a way to track your stats daily is going to be key. Cool. To wrap things up, Andrew, on your end, what would be your list of 3?
I think for me personally, right, like I need to overhaul onboarding. It's a weak spot in my agency. I remember coming to your office. We got together last year, at that boot camp you ran, loved it. And I remember walking away and being like, okay, my onboarding sucks. And then here we are, we still gotta make it better. And we've improved it, but like we can do a lot, more. But I think it's very similar. I think like my steps, like in my deck, which again we'll send out, I think I had 5 steps, but ultimately what I would break down and think about is like, one, understand everything you can sell and what you get paid on it so you can pick what are the most important things to focus on. Second, create awareness and training for your team, right? Like tell them what you have, why it's important, how to pitch it, how to position it, how to close it, how to bind it on your team, how to service it. And then last is just create visibility and accountability. People will forget if you don't keep bringing it up. I know I have a million things that I want to do, but if I don't keep hearing something that reminds me, I forget about it. So those would be my 3, right? Find what you can sell and pick so you can prioritize, create a training and awareness plan, and then talk about it over and over and over again forever. So.
And Makai, I'm going to put you on the spot, but you're a quick thinker. For the agency owner who walks out of this call and says, all right, I know what I'm doing with my sales team, but service team, not sure what to tell them. What do you tell that agent on what message to have with the service team?
That is a wonderful question and something really relevant to what we've been doing here in our agency and launching. Speaking from someone who was originally in service, I think framing it as not only your service, you guys are growth partners. Having them take pride in being part of the vision of the agency really goes a long way. Having them track their contributions towards premium also helps morale. It's one thing to say, I got a point for closing a cross sale. It's a whole other thing to say that I closed 1,500 in premium. That there's a pride behind that. So do everything that you can to make it a sense of pride for them to be a growth partner for the agency.
Very well said. Awesome. Well, we appreciate everybody who was on the call today. Andrew, thank you for hosting this. Makai, thank you for managing the chat. We will take this recording and send it out to everybody later today, along with the resources as well. We appreciate everybody. If you guys have any questions, please reach out. Take care. Bye-bye. Bye-bye.
Yeah. Thanks, guys.
Bye.